Good evening, everyone. Welcome to Banao Bharat's Trading for Living Thursday Nifty Expiry live session, 5th of October, and we have just concluded the first Nifty expiry for the October series. Kind of muted expiry, I would say. The way market responded from the lows yesterday, it looked like there is going to be a lot more action in today's session. A kind of severe short covering is what I was looking out for, but markets are markets, and that kind of severe short covering we didn't see, which is kind of reconfirming this down move which has started from all-time high of 20,200 levels is not yet over and probably this time round it may not even stop around 19,300 August lows. Maybe we may have to settle down with lower lows. This is the action today. Let us first look into the Nifty chart. Opens at around 19,540 levels. From there on makes an intraday low at 19,514. This is the Nifty futures chart, and in one single candle crosses 19,600 for a very brief time, makes a high of 19,616, and after that it just very quickly and continuously comes below 19,600. After that spends large part of the day around 19,550 levels. So this is how the Nifty expiry has happened. Closed at exactly 19,550, making all the 19,550 calls and puts to almost zero. Kind of the way in this candle at around 11 o'clock, the way in one single candle with volume it picked up and went towards 19,600. There was all indications that maybe this up move will continue, and we expected a good close because the setup was yesterday's very good pullback and today's gap up, all suggested, and one big green candle at 11 o'clock. All of these three things suggested there is going to be continuation of this up move, and probably what looked like very convincing close, it would have been above 19,600, was by end of the day it was not to be, and we had to settle down at around 19,550 levels. This is Bank Nifty chart. The same story like Nifty. Yesterday's pullback, today good opening. Initially, even though it came down a little bit, made a low of 44,280, there was all indications it was just settling down for good up move. And along with Nifty at exactly 11 o'clock candle, we see one big up move even in Bank Nifty, wherein it crosses 44,500 levels and for a very brief time stays above 44,500 levels and makes a high of 44,550. But after that all the rest of the candles were so narrow, so small, it was kind of surprising what the bulls are doing or what the bears were doing. Absolutely clueless, absolutely no movement. It was just a grinding move to 44,400, and looked like non-directional players who played the strangles, out of the money strangles, really pocketed all the returns. What is surprising is in such a trending market, there were all the indications of a big trend emerging today. In an ongoing down move, yesterday it made one good low and a good bottom was established. From there on, good pullback also had happened. Today it opens well, settle down for 4 to 5 candles and takes off with one big candle both in Nifty and Bank Nifty, but unfortunately that up move does not get sustained and gets terminated almost immediately. After that there is no big sell off also, and there is no buying strength also, and rest of almost 3 to 4 hours we had to just grind through the day with absolutely no movement in intra candles. If you see the 15 minutes candle, each candle's range was not more than 50 to 60 points in Bank Nifty itself, and absolutely no movement in Nifty's 15 minutes candles. So this is how it all panned out today. Not a kind of a day what we had expected based on the data points, but then markets are here always to surprise us. We have to take it in our stride and we have to just move along. Tomorrow being RBI's policy announcements, we will have to position ourselves accordingly. Most likely there will not be any change in interest rates. That is what is expected by market participants. Most of the consensus estimate in India is there won't be any rate hike tomorrow, and that is my view also. But what the analysts and other big participants are watching is what is the statements that will be made during the speech of the RBI governor. So people will be very closely watching the statements and trying to read between the lines, and they will try to decipher whether the statements made by the governor are hawkish or dovish. Based on that, people's next course of action may be decided. But for traders like us, it is all and always it is the price action and volume, and it is within a trend what is the kind of price action we are getting. So we will stick to that price action, we will stick to that volume analysis, we will stick to that trend and look out for any breakouts in that trend, or we will look out for any pullbacks or reversals. So we would like to keep our approach simple. Instead of reading between the lines of so many other things, it is better just we read the price action in detail and keep our view narrow and focused on few parameters, so that we don't get distracted and don't develop conflicting signals in our mind. The moment we start watching too many things, then each one will show a different information, which will lead us to developing multiple thoughts, and obviously at the end of the day one of the thoughts will come true and rest of the thoughts will be proved wrong. But then what happens is, when multiple thoughts are emerging in our mind, it becomes difficult to make a decision. So a intraday trader or a trader of any short time frame, I would suggest just stick to the charts and stick to your own technical analysis parameters and methodologies, and do not get distracted by external news, external events. It could be results, it could be RBI policy, it could be government announcements, it could be corporate announcements. At least during the market hours, do not try to decipher during the run time what is the news or events suggesting. Instead, during run time, interpret the price and try to take some action and try to stick with that methodology of your stop losses, so that market will do whatever it has to do. The overall consensus of the information we really don't know. So in spite of whatever analysis we do, it does not move based on our analysis, it moves based on the consensus estimates and consensus opinion of all market participants put together. which is very difficult for us to decipher anyway. So better stick to your methodology which is based on charts or any other data points and not on news and events, especially at least during the market hours. Post market hours, it is all easy to analyze and make out what market did, but during market hours what will give us money is what decisions we make during the runtime, and runtime decisions, it is always better keep it meet tomorrow and discuss the market with tomorrow's perspective. Until then, if you are liking the channel, subscribe the channel, share the channel with fellow traders, and come back during these live sessions so that you can get some insights on how we see the markets. And if you have any queries regarding the market, if we know anything about that, we will be glad to help you. Let us once again meet tomorrow. Until then, Om Swasti.